Hi, welcome back to Investor Insights. I'm Vic, and this time around I'm going to explain the term leverage. Sometimes it also goes by the term gearing. Now, leverage is simply enhancing your portfolio's returns through borrowing money. It's especially good when interest rates are low, exactly like it is now. So, for example, if you didn't use any leverage and you had 100 grand to invest and you put it into something that after 1 year returned you 10%, your portfolio is going to now be worth 110 grand, plain and simple. But say you managed to borrow $100 from the banks or whoever and combine that with your original 100 grand. So now you've got 200 grand to invest. You would put it into whatever you invested the first time around, and your portfolio returns 10% again. But your real gains, your own personal gains, is actually $20,000 because you put in 100, but yet the portfolio is now worth 220. And even after paying the banks back the 100 grand, I'm not taking interest into account for the time being. So after you've given back the 100 grand, you still got 120 grand. So instead of having returned 10%, you've now returned 20%. And if you're brave enough and you want to borrow more, you can always borrow $200,000 against your 100 grand. And now you've got 300 grand. And now that 300 grand, given the same return, is now going to return you 30 grand. So on an outlay of 100 grand, and after paying back the bank their 200 grand, you're now going to be up 30 grand. So that's a 30% return. Doing exactly the same thing as using your 100 grand, but this time with leverage. So leverage is a good thing. But that statement comes with a few caveats. And that is, leverage is a good thing when the trade works for you. When the opposite happens, you get crushed. Because if you have 100 grand and your portfolio goes down 10%, you lose 10 grand. Your portfolio is only down to 90 grand. But if you had borrowed 100 grand, your portfolio would now be down 20 grand because you still owe the bank 100 grand, but the 200 grand portfolio has now lost 20 grand. So you've lost 20 grand. The bank will never lose any money from margin lending to you. And you can do the maths for, doubling the leverage again to say a 300 grand portfolio. Now your losses are big. 30% if you had borrowed 200 grand. Now, the banks don't lend much beyond that. If they do, they're crazy. But it's a lot of money you're dealing with when you're basically tripping your portfolio through leverage. And leverage is what got the American banks into deep strife during the global financial crisis. But that's the subject of another video. Now, leverage doesn't even I take that back. Leverage doesn't just work with stock investments. Leverage also works with currency trades. But the leverage with currency trades is huge. The leverage with stock trades could be 50%, i.e., for example, you've got 100 grand, you borrow 100, so you're geared 50-50. But with FX transactions, you could be geared 100 times, could be geared 200 times. I've seen some accounts that let you get geared 500 times. Now, you can make a lot of money when the trade works for you, but you get absolutely pummeled when they work against you. I'm not telling you to trade FX, but I'm just going to use a very straightforward example. You don't need $100,000 to buy $100,000 worth of currency. If you go on an FX platform, the leverage, the margin required to borrow, to trade $100,000 is only about $1,000 if you're leveraged 100 to 1. Now, if you had $100,000 and the trade moves for you 1%, without any leverage, you've made $1,000 on your 100 grand. But if you lever that up 100 times, a 1% move means your entire portfolio gets wiped. That's where trading strategies involve very tight stop losses, because you've got to cut these losses short and let the winners run. Leverage is very good when it works for you, and it can be very painful when it works against you. So next time you decide to make an investment using leverage, don't just think about the upside, think about the downside. And it doesn't matter if it's for the long-term investor or the short-term trader. So until next time, if you have any questions, and I'll talk to you next time.